Welcome back, and joining me with more insight on the day's trade is Graeme Franck from PSG Wealth Sandton. Grayston, thank you so much for your time, Graeme. Let's start off with China and the US. Of course, we know that they have been involved in a tit-for-tat tariff spat. Is there some sort of a sense of relief looking at China saying that they are open to talking with the US on tariffs?
Yeah, I mean, absolutely. I mean, we saw the offshore markets jump quite nicely overnight. I'm sure we'll talk about the earnings season as well.
Yeah.
But tariffs was one part of that. I think, as I said in my last interview with you, that I don't think anyone wins a trade war with China. Even though the US is a bigger economy, a communist state like China will unfortunately withstand more pressure on its citizens than the likes of the US. So the fact that China has made a sort of an opening the door step, I think, is certainly very positive. And the other thing to remember, I think I mentioned last time as well, is that the US goes into a midterm election next year. So whatever Donald Trump needs to do, he needs to do it now, because all this uncertainty leading into a midterm next year is certainly not good for his prospects in the Republican Party. So quite a lot to play for. Sorry, it's quite a long answer, but a lot to play for at the moment.
I mean, just looking at Donald Trump's options at this point, did the economic data during the week also maybe bring in a sense of urgency that he actually does need to turn things around and things can't go the way that they have been going?
Yes, 100%. I see the unemployment rate went to about 4.5% in the US, which is quite a big jump. And as I mentioned last time, no US president has won re-election either in the presidential or in the midterms in the face of a recession or weak economic data. So certainly their hands are starting to be forced at this point, given the jump in unemployment.
Yeah, and indeed those recession alarm bells are ringing again, looking at the Q1 contraction that we saw in that economy. And actually, companies have to operate in this environment as well. How is tech? I can imagine that maybe it is one sector that maybe wouldn't be as highly impacted by, negative pressures on the economy, maybe indirectly. But just looking at those numbers and their outlooks, how did you read those?
Yeah, so last night was a massive night. We got the biggest beats were from Microsoft and Meta. Those share prices were up about 10%, so quite significant beats at the top line, at the sales level, at the earnings level, and the outlook. Then to a slightly lesser extent, Amazon and Apple, they still beat. Share prices were up 2 to 3%, but certainly not in the realm of Microsoft and Meta. And I look now, so far 50% of US companies have reported. So this quarter we've had 50% come out. And of those, 76%, so roughly 3/4, have beaten expectations to the tune of a 9% beat. So that's quite a material beat in the face of a weak economy. And as you said, rightfully so, driven by tech, but certainly very robust at this point, US earnings season coming out.
All right. Well, let's bring it back home and take a look at the South African PMI that came out. Just, highlight what's come out of there and really what it's saying about our economy at this point.
Yeah, not good news. I mean, so PMI is basically a good reflection of the manufacturing industry in South Africa, and the data that came out today, it dropped from, so basically anything above 50 means that our economy is expanding. Anything below 50, it's contracting, and it's dropped from 48 points last month to 44 points this month, and that is the 6th consecutive month of decline. So, the South African businesses are operating in a very weak manufacturing environment. I think that's a combination of upheaval within politics at the GNU, obviously the VAT, the whole budget debacle, coupled with offshore uncertainty, as we've now talked about the tariff war, the trade war. So South African manufacturers are under pressure. And very interestingly, Sonati, I looked earlier, the rand peaked in April, so about a month ago. It peaked, I must get this right, 1974, and it's currently trading at 1838. So despite all this weakness, the rand watchers are saying that perhaps the worst is over and the rand is strengthened by well over a rand in the last month.
All right. Before we get to your stock pick, quickly, Gold Fields coming out with another cautionary announcement linked with their proposed acquisition of Gold Road Resources. I can imagine that these talks are quite intense, considering that Gold Road basically rejected Gold Fields' first offer. What do you make of this?
Yeah, to be honest, I haven't followed it that closely, other than what you've just said. They have reaffirmed in a cautionary today that they are continuing in talks in Australia, and it will be a scheme of arrangement there. It hasn't had any impact on the share price. The share price is still being driven by, at the moment, a declining gold price. Obviously, you would have known that over the last few months, the gold price has gone significantly higher. But in recent days, or a couple of weeks, it's come down. And about 2 weeks ago, I think it was, for the first time ever, the gold price went above 2 million rand per kilogram. So the gold companies have really been driven by the rand gold price at the moment, and less so some of these corporate actions.
All right. Well, let us get to your stock pick for today. What are you choosing, Graeme?
So I'm going to go for AVI. Despite what I said earlier about a weak manufacturing environment, they're an industrial company in South Africa, extremely well managed. We tend to always like quality counters in any sector, whether it's retail, banking, and in the industrial sector, I don't think it gets better than AVI. Their share price peaked at 114 rand about 6 months ago. It's currently 93. Trades at a PE of 12 times and a dividend yield of about 8%. So really high quality company if you're looking for exposure to the SA economy, and if you do believe that perhaps things have bottomed and the future's looking a bit better.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money today and this week. Graeme, really appreciate it. That was Graeme Franck from PSG Wealth Sandton, Grayston.